Core principles of asset liability management in banks. Asset liability management, or ALM, is crucial for banks to ensure their long-term profitability and risk management. Let's delve into the core principles that banks must adhere to in their ALM practices. Understanding the basics. At its foundation, ALM involves managing risks that arise from mismatches between assets and liabilities. These mismatches can lead to interest rate risk, liquidity risk, and funding risk. The main objective of ALM is to optimize the bank's balance sheet, ensuring that it can meet its obligations while maximizing returns. Interest rate risk management. One of the primary concerns in ALM is interest rate risk. Banks earn interest on the loans they provide, while they also pay interest on deposits. Changes in interest rates can affect the bank's profitability. To manage this risk, banks employ various strategies such as liquidity management, gap analysis. This method evaluates the difference between the rate-sensitive assets and the rate-sensitive liabilities over different time periods. Duration analysis. By assessing the duration of assets and liabilities, banks can measure and manage their exposure to interest rate changes. Liquidity is essential for banks to meet their obligations and fund withdrawals. Effective liquidity management ensures that the bank can access cash or liquid assets when needed. Key strategies include funding strategies, liquidity coverage ratio, LCR. Banks must maintain a sufficient level of high-quality liquid assets to cover net cash outflows for a specified period. Stress testing. Conducting stress tests helps banks prepare for unexpected liquidity events and understand their ability to manage cash flows in adverse situations. A solid funding strategy is vital for maintaining stability. Banks must ensure they have diversified funding sources to avoid over-reliance on a single source, which can pose risks. Effective funding strategies include regulatory compliance, broadening funding sources. Banks can explore various funding options, such as retail deposits, wholesale funding, and securitization. Maintaining a stable deposit base. Retaining a loyal customer base for deposits is essential for ensuring low cost and stable funding. Adhering to regulatory standards is a critical aspect of ALM. Banks must comply with guidelines set by regulatory bodies, such as the Basel III framework. This involves scenario analysis and stress testing, capital adequacy, holding sufficient capital to absorb losses and support ongoing operations. Asset quality assessment, regularly reviewing the quality of assets to ensure they conform to regulatory requirements. Analyzing potential future scenarios is essential to understand how different variables can impact the bank's financial stability. Scenario analysis helps identify vulnerabilities and assess risks under various economic conditions. Stress testing provides insights into how severe economic disruptions could affect the bank's balance sheet and liquidity position. Holistic risk management. ALM should not operate in isolation. A holistic approach integrates risk management across the bank's operations. This includes collaboration across departments. Ensuring communication between treasury, risk management, and business units is essential for informed decision-making. Comprehensive risk framework. Developing a framework that encompasses credit risk, market risk, operational risk, and liquidity risk is necessary for effective ALM. Conclusion. In summary, effective asset liability management is vital for banks to navigate the complexities of financial markets. By focusing on interest rate risk management, liquidity management, diversified funding strategies, regulatory compliance, scenario analysis, and holistic risk management, banks can enhance their resilience and profitability. These principles provide a robust foundation for navigating the challenges of the financial landscape and ultimately achieving sustainable growth. Ready to elevate your treasury expertise? Become a Global Banking Hub member to access exclusive courses, earn certificates, and get personalized feedback. Join now at www.globalbankinghub.com.